In today's video, I'm going to teach you how to create a loan note in QuickBooks Online. We'll walk through 3 clean, accurate steps: setting up the liability account, recording the money you received, and entering payments so principal and interest are split correctly. This approach keeps your balance sheet and profit and loss in sync and makes reconciliation straightforward. To start, open the Settings gear in QuickBooks Online and choose Chart of Accounts. Click New to create the account that will track what you owe. For account type, pick long-term liabilities if the loan extends beyond a year, or choose other current liabilities if it will be paid off within 12 months. For detail type, select Notes Payable. Give the account a clear, specific name, such as bank loan, lender name, so you can instantly recognize it in reports. If you manage multiple loans, use a separate liability account for each one to avoid confusion later. When you're done, click Save and Close. Next, record the loan money received. Go to the plus new button and select Journal Entry. On the first line, debit your operating bank account for the full principal amount you received. On the second line, credit the loan liability account you just created for that same amount. Date the entry to the day the funds hit your bank, then click Save and Close. This single journal entry captures 2 truths at once: cash increased and you now owe the lender. If your bank feed already shows the deposit, this entry gives you the proper accounting backbone behind that transaction. Keep in mind, do not include interest or regular payment amounts here. This step is only to book the principal you received. Finally, record each loan payment properly so the balance declines accurately over time. Click the plus new button and choose Expense. Enter the payee as your lender and select the bank account the payment came from. In the Category Details section, use 2 lines. On the first line, select your loan liability account and enter the principal portion of the payment. On the second line, choose Interest Expense and enter the interest portion. Use your statement or amortization schedule to split the amounts, and consider adding a memo with the period covered for easy reference. Save and close. Coding payments this way ensures principal reduces the liability on your balance sheet, while interest appears as an expense on your profit and loss. That's it. With the liability account set up, the funds recorded, and payments split correctly, your loan activity will stay clear, auditable, and ready for reconciliation.